All right, so you're not going to believe this. I have three dividend stocks I'm going to present to you today. And yeah, so something terrible and exciting happened all at the same time. So I'm hoping that the terrible part will pass and then the incredibly good thing will happen in the not too distant future. So hope you follow along. Click subscribe and like so you can follow my series. And this is basically a dividend experiment that I'm throwing out on YouTube to try out a couple different systems that I have, and yeah, so let's get started. All right, so first one out today is, well, I'm just gonna start by telling you that we're gonna leave the big one to last. Open Text Corporation. So I kind of been holding off on this one, and I don't know why, but it's kind of been lingering, and it's had more than a 20% drop this year. But I thought, well, I'm gonna go ahead and do it. So it's sitting at about 3.4 yield right now, 3.4%, and it's recently risen a little bit since its low for the year. I think it's the year, anyways. But it's had a significant drop, and so based on my screener, and it's been popping up on my screener for a while now, only when I drop the requirements just slightly. And what I mean by that is I went from having to have 7 years of consecutive dividend increases down to 5 years of consecutive dividend increases. PKI, Parkland Corp, still on there, which I've done in previous videos, several. I've had 3 buys, I think, but I don't want to overdo that one because I think it's going to grow, but anyways, it's not growing right now. Open Text Corporation is kind of looking like it's going to have a little bit of rebound. Plus, I went and checked it out, and it does seem to be, not a bad idea. So I checked it out, and the Graham's revised valuation formula that I'm using says it should buy. So I was like, well, that's kind of interesting. And I picked it from my screener, so I like it. So that's OTEX on the Toronto Stock Exchange. All my stocks I'm picking are in the Canadian Stock Exchange. So yeah, that's the first one. Kind of rambled on about it, but there you go. So the next one's Nutrien. Now, Nutrien is an interesting one because it's had fairly major drop in its production. So I've read. So I don't know that much about it, but so I kind of shied away from this one because I don't know a lot about it. But I kind of started looking into it a little bit more, and it's supposed to have an even bigger drop this year. And so I'm like, is the price already showing that? Now, when I kind of looked up to what different valuations are on it, the valuations are actually quite high. But when I put it in the formula, it's actually a sell. But I kind of liked it anyway, so I went with Nutrien. And one of the things with Nutrien right now is that they were worried about the strike with the rail lines, so they figured that was going to cut into their profits. And the government, I think, stepped in and stopped that. So I think that's all done with. I don't know if it's going to pop up again or flare up, but for right now, it is apparently not an issue, because both the rail lines were the major rail lines in Canada. There's 2 big rail lines that go across Canada, and they contribute, I don't know, it's like billions of dollars a day. So for them to be on strike is kind of devastating for the whole country. But anyways, back to Nutrien. So Nutrien is not going to have that same kind of loss they were. So I feel like the price drop might do that. So that's NTR on the Toronto Stock Exchange, and it's actually going for a 64.96, but it's a yield of 4.6 right now, which is actually not too bad. Now, inflation recently in Canada got back down. I watched too many videos about all this stuff, so I believe it was in Canada, got down to the regular kind of 2 to 3 range, about 2.5%. So inflation's down, the bank rates potentially dropping again, or may drop. So there's not that upward pressure. So having a 4.6 yield isn't all that terrible anymore. Anyway, so Nutrient is my second one, and the formula says it should sell, and it's got a mixed review, although the valuation that I came across does say it is potentially having a higher valuation. Now this is one totally based on percentage drop. I believe that this one's going to come back, although the percentage drop is not as maybe good as I would look with others. Now here's the big news. I went ahead and did PXT a while back, and I think it was before my first video, just when I was starting out with this. And so I did, so Parex Resources, I bought at $17.50, it's down to $12.07 today. Now there was some bad news for them. They're having trouble in Colombia. Now I went ahead and did the valuation on them again, and the intrinsic value is just like through the roof with Graham's revised valuation. So it's like a buy. Like, it's ridiculous how much higher that one is. So I didn't rebuy it because of that, but I'm going with it again because it has this huge drop. So I'm going based on percentage drop. When I previously bought it, it had already had a drop. So I feel like whatever is going on, if it doesn't end up being such a huge deal, it's just big news, it could have a huge rebound right away. With that being said, you know, might be a bad situation for me. So if it drops, see, it's dropped over 20% today, and yeah, it could. It's actually down 31% from when I bought it. So if this news ends up not being as bad as originally thought, it could have a rebound. But if it doesn't overall wreck the value of the company, then this could be a good comeback. So whatever the issue is, I'm kind of hoping that they had already seen it coming, so they made some kind of valuation on it. So I'm kind of betting a little bit on the gambling side here, a little bit, but I felt like it was a good company to invest in earlier on, so that's why I feel like this is a good scenario to maybe take a little extra chance on it and hope that the news that's coming out is not as severe as the reaction. So there you go. So that was PXT, Parex Resources. Those are my 3 picks today, and I can tell you as of right now, I've got a small gain with Champion Oil at about 4%, and Canadian Natural Railway at 2%. Everything else is at 0 or slightly down, mostly 0. So Aliment Couche-Tard is down 2%, and of course Parex, the previous purchase, was down 31%. So these things happen. So anyways, so that's it. Now I'm gonna add, for Graham's revised valuation, I'm gonna put the link in there so you can see where I'm getting this formula from. And it's not how I'm picking my stocks, but that's it. My screener, well, you saw a picture of my screener, so that is basically how I've set up my screener. I'm not an advisor, so none of this is advice. This is just simply me sharing with you what my dividend experiment is, and yeah, using a screener on one side and using a percentage drop on the other to kind of hopefully end up getting some value, future value out of stocks I buy, or getting some kind of a bounce and swing trade. So that's it. That's it for my dividend experiment today. Click subscribe and like, follow along. We'll see you next time. Remember, I'm not an advisor, so if you need advice, go see an advisor. If you follow along and decide to participate in what I'm doing, it's at your own risk. So make sure it works for your portfolio. See you next time. Have a great day.